I'm really pleased to be joined by RC Peck today. So a big welcome to you, RC, and thank you for joining me.
It's great to be here. Thanks so much.
It's my pleasure. So RC, you are an investment educator and trainer. So please introduce yourself and tell us more about you, your education and training business, and how you help many others in the ways that you do.
God, introduce myself, huh? So I go with identity, right? So how do I identify or self-identify? And even though in some ways it has nothing to do with financial advising and money, when you ask that question, the first thing you think of is I'm a single dad. So I have two kids, divorced. And so I'm a single dad. How I got into investing is probably a little different than most people. My parents had their life savings stolen from them. So I grew up in the Midwest. I grew up in Illinois, outside of Chicago. And as a late teenager, first year in college, came home. Both my parents were sitting on the sofa, crying, super scary. I thought one of my sisters was dead. I asked about, is Tara and Tanya, what's going on? I don't understand. Most 18, 19-year-olds don't ever have seen their parents crying unless maybe they're at a funeral or something. And it turned out that their financial advisor embezzled all their money from them. And I was first semester, I was in three trimesters in my college, but first part, and I was super scared. Like, am I going back to school? Like, are they telling me no more college? This is scary feelings for a 19-year-old brain. And I didn't understand how someone steals your life savings, like to a 19-year-old brain, how to like steal a car, steal a TV. How does someone steal all of your savings, all of your life savings and accumulation? So I'm kind of a cynic. I am exceptionally skeptical. My heart is open, but I'm direct. I think there's an incredible amount of misinformation out there in the world of how to grow money, how to protect money. And so I kind of come at it from an outside point of view, right? I didn't work for a big box advisor. I did graduate college. I was an Asian studies major. I lived in Asia in my 20s. I made a lot of money selling medical software and hardware in Asia. And I came back home. I said, I'm going to figure out this money thing. I wanted to figure it out. I wanted to figure out how this whole thing works. And so I basically spent my mid 20s figuring it out. And I didn't owe anyone any money. I didn't have to go, like, I paid everything off. I figured out I could live to 115 years old, and everything was paid for. Now I had no mortgage, I had no wife, I had no kids, but I was like, I was free. I was free to figure out this money thing. And so maybe it's a long answer to your question, but I came at this very, very skeptical, even cynical, because I was angry.
Well, it's hardly surprising given the experience you've had with your parents. I think anybody would have been. So,
yeah, I mean, yes. So, I mean, that's kind of like, I came at this like, oh my gosh, did you know this? Did you know this? Did you know this? And so when I started my coaching company, which, by the way, there was no such thing as coaching people, like being a money coach or an investment coach. And that's barely a thing today in the US still. But definitely back in the late 90s, there was no such thing. Like, you don't need a money coach. You just put your money in the stock market and it goes up. But I started Fearless Wealth in 1998 to be like you pay me, I train you to think in a way that's best for your money. Outside of the complex or the structure of this big box, investor idea. Yeah.
And if you started this in 98, then you certainly were an early adopter of this type of coaching.
Well, and I did it because I did it because I was frustrated. I was angry, and I didn't have to go get a job. Like I could go, I was living outside of Manhattan at the time. I would go into the city and go in to the Twin Towers and go down to the trading pits and go, to parts like, where the traders sat with their shirts and ties and watch them trade and be like, oh, it's not how we're taught it's to be. Oh, okay. So just really getting that insight of, oh, I understand I'm doing kind of a collective they. We're taught to be scared.
Yes. Scared of money.
We're taught to be like, this is the thing I became very, like, it was one of the first things that became super clear to me. Like when you talk to an advisor or a money manager or a broker or an insurance salesperson, but anyone dealing with money, I was like, they're literally teaching us to be scared. I'm like, oh God, this is feeling scary. Like these conversations I would have with people, I'm like, they're teaching me to be scared. And then they swoop in saying, hey, don't worry. I'll take care of it. Like, but you just scared me. And you're saying now you're going to take care of my scaredness. I was like, this seems kind of bullshitty. Like, whoa, like, is that true? And just so you understand, like I was already a skeptic. I didn't know this, but I had undiagnosed dyslexia.
Okay.
So I didn't read a book until I was 19 years old. I went to a very expensive high school in a very rich town. And the only reason I graduated with very good grades is because this high school in this very rich town had this massive wing of just art.
Yeah.
Any type of art class you could think of, they had. And I aced every art class. The teachers loved me. They gave me extra one-on-one classes, and all those classes, those A's counted the same weight as physics and English and science. They're the same weighting for the GPA. So I stacked my years in high school with art classes.
You mentioned you also visited the trading floors and the pits, etc. So, which give you a great deal of insight into trading on investments. So how did you go from there to educating yourself on these topics?
By losing a lot of money.
Trial and error.
There were many excruciating years. I mean, if there's ever a time to lose all your money, it's in your 20s.
Yes, I agree. You can rebound, you can recover.
And so I probably didn't have any money by the time I was 30.
So does that mean then you've been able to live to 115 has already changed by that time?
So, I mean, you can't read a book on swimming and learn how to swim.
Yeah.
And I wrote a book on investing. I think 3 people bought it. I mean, there's lots of books on investing, but what I realized is, someone has to hand someone money and say, you train me to be skeptical of you.
Okay.
And to skeptical of everyone. I don't want to have to trust anyone. Now, we may have to trust a brain surgeon because we're not going to spend 15 years or whatever it takes, right? But we don't have to trust the cashier necessarily or the bagger at the grocery store. Like, we don't think like, God, am I trusting them? Right? But there's this whole trust thing when it comes to money. And I was like, the brain has to shortcut. The brain uses these things called heuristics, like shortcuts.
They do,
right?
yeah.
So if we don't know something, we have to trust. So Tony, I don't know that person over there, but you know that person over there, and I don't know them, but you know them. So the human brain goes, well, I know Tony. I trust Tony. Tony likes that person. Therefore, it's okay to like that person. I'll be okay.
Yeah.
We use this with money as a shortcut. Someone's making something very complicated. I don't know what's going on, but I trust them. I like them. They have great rapport skills. They look good. They're taller than me. Their spouse is better looking than my spouse. Their car is nicer than my car. Their house has more square footage than my house has. They live in a nicer part of town. I don't know what they're talking about, but I use all these shortcuts to go, they're taller, better looking, spouse better looking, house bigger, car nicer, work at a higher floor in a building.
So they must know what they do it.
They must know more than I do.
Yeah.
And I don't know because I'm scared and confused. You know what? Here's my money. And it's a racket from the standpoint of investing is crazy simple. And the human brain has no understanding of growing money. It's a brand new concept to the human being. It's a brand new concept. This idea of growing money is brand new to the human being.
I think for a lot of people, you might obviously with your experiences think differently, but what I see on my day-to-day is people are afraid of money, and one of the reasons for that is they're afraid of making mistakes and losing their money from an investment point of view. And they don't want to or have no inclination to spend the time to find out for themselves.
Well, it's funny. I talk to my coaching clients. And I say, imagine there's a room in your house. And on the door of the room, it says, you're going to feel mad, sad, afraid, and maybe glad. But maybe all four of them. And varying degrees of ingredients levels. So maybe you go in one time and it's rage.
Yeah.
So it's mad 7x.
Yeah.
Or another time it's scared. Or another time it's sadness. So how often would you go into that room? Right? You probably wouldn't want to go into that room a lot. The interesting thing about money is it loads up mad, sad, glad, afraid. Now, those are the only four feelings humans have.
Correct.
Humans can only feel four things. Now, adult humans make up all these words for mad, sad, glad, afraid.
Yeah.
You know, I'm overwhelmed. I'm feeling overwhelmed. Overwhelmed is not a feeling. What is, oh, I am scared and sad. Okay, so you're feeling 3 parts scared and 2 parts sad, which an adult human calls overwhelmed. And I don't mean to go too deep, but when you can teach someone to identify the feeling and not call it an adult word, but call it like a 10-year-old word, like, Tony, I'm feeling really scared to go look at my retirement account. Okay. Once you identify the feeling, what's interesting about the brain is it actually calms down. Literally blood stops, the blood flow to your amygdala decreases as soon as you identify the feeling and you say it out loud. And I figured this out. I'm not like patting myself on the back, but I figured this out when I taught this to clients and they just said it to their spouse, honey, I'm scared. And usually it was the husband that I'd be coaching to the wife. And she's like, I didn't know that. Well, yeah, you're having me do everything. And it's scary that if I mess up, then you're like, well, that was your fault. Like, I don't want it to be my fault. And she'd be like, I didn't realize you were scared. Yeah. But no one teaches this. It's so basic. Of course, money is scary. So yeah, money is interesting because it's this vehicle that brings up, and I hope I don't lose half your audience if I haven't already. I'll maybe lose half of them now. It actually brings up past trauma. It actually brings up past trauma. And that's why people go, you know what, I'm just going to get someone to manage my money so I don't have to deal with this.
I think knowing, I mean, obviously you've coached thousands of people over the years, but you need to know at least the basics of managing or investing to know, even if you're not going to do it yourself, you can have a good conversation with any advisor that you're going to use to do that. And sometimes if you're working with advisors, if that's the choice, and you don't know your sort of toe from your elbow, then you're never going to learn. You need to engage with other people and advisors. But I agree with you. The best thing of all is to manage to or learn how to manage monies in the first place, because you're in control. You're not relying on anybody else's decisions, whether it's good, bad, or indifferent. And the more you understand, the more you learn, the more fun and enjoyable it becomes. Money doesn't have to be dull and boring. It can be lots of fun if you get it right.
Well, yeah, I mean, once you understand what's going on, you're like, oh God, this is going to do that. Right. I mean, so one of my philosophies is there's 3 parts to every human. For a second there.
You are freezing, yeah.
Yeah. Yeah. Did I freeze too?
You did a little bit, but it's fine. Just pick up where you left off.
Okay. So there's just three parts to every human. I believe there's your wealth, there's your health, and there's your relationships.
Yeah.
And you can't actually outsource any three of those.
Correct.
Right. You can't hire someone in the Philippines to manage your marriage. Now, if you want to hire someone to manage your money, that's totally fine. But I of course come from the point you need to be consciously competent.
Yeah.
Right. You
I
want to be consciously competent. So if you go into a watch shop and you walk in and they have a shovel, a hammer, and a pickaxe, and you bring your Rolex watch in, and you're like, you probably don't know much about how watches work, but you know enough to go, I think those are the wrong tools to be using. And the problem with money is we're not taught like even the rules. Like one of my rules is if you can't beat the S&P 500, first of all, just understand that the S&P 500 with dividends reinvested,
correct.
I call that your free stock market rate of return.
Yeah.
It's free to buy, it's free to own, and it beats 95% of everyone over any 5-year rolling period. So look, if you want to do this, you start, I say start at the front of the line. That's not where the story ends. It's just where it starts. Like, so why not just start with the thing that beats almost everyone? Well, most people don't even know that.
Yeah. Yeah. We use trackers in the UK too.
Yeah. So
tell me, you at the age of 30, and you'd had some negative experiences in terms of you lost a lot of money. Where did you go from there?
So one of the things I ask my clients is, do you need to figure this out, or do you want to figure it out? And there's no right answer, but they're two very different answers. So one of the courses I have is people want to learn how to trade. And what I know for sure, traders, if you want to be a good trader, you have to want to do it. And you have to want to figure it out. Trading is very different from investing.
Yeah, absolutely.
And so if someone comes in, I'm like, oh, it sounds like you need to figure out how to trade to make up for lost time. I was like, this isn't going to work. This is like, if it's a trading conversation, if you don't want to figure it out, it will absolutely not work. Investing is different. So I'm answering your question as far as like, I wanted to figure out the money thing.
Yeah.
I wanted to figure out I wanted to figure it out because my dad was 50. So I'm 50 in a month, I'll be 50. My dad was 50 when he lost all of his money. It was stolen. It was embezzled by his financial advisor. And my mom was 47. So now here I am, I'm 50 now. I have 2 kids. I'm a single dad. Oh my gosh, if I lost everything, first of all, he didn't lose everything. It was taken from him.
Yeah. So
what I did was I got a day job. I did not know how to talk about what I did.
Yeah.
Like, hey, people pay me to train them. Oh, I thought that's free. I'm like, what do you mean? Oh yeah, if you go on Fidelity or Merrill Lynch or Morgan Stanley or JP Morgan, they have a whole tab called education.
Yeah.
Oh, it's free. I'm like, oh no, that's knowing the difference between a stock and a bond. Yeah, okay, got it. Yeah, okay. But I'm talking about what happens when you actually put your money in, and how do you know when it's not, like, how do you know when it's not right? And so it took me a while to figure out, oh God, people don't buy training. Like if you want to be a good footballer or soccer player, you have coaches, you have trainers. You don't see them reading books. Like they're telling you, and I grew up playing soccer. So I got a day job. I mean, you asked what happened. So I was like, I need a day job. I went through all my money. So I got an outside sales job. I figured out how to not get fired by working 2 days a week at this company. I mean, I came in, I was the outside salesperson. I figured out the system very quickly. I'm like, okay, there's 50 sales reps.
Yep.
Okay, the bottom 5 get fired every 6 months. Okay,
Yep.
Don't be the bottom 5. The top 20% never get called in. They never get issue. I'm like, oh, if I'm number 20, everyone leaves me alone because there's 30 people below me that are having to deal with stuff. So it's like, what's the easiest way for me to get a B, you know, be a letter, the letter B, like, and this is what I did in high school. How do I get a B and then spend the rest of the time in the art department? So I got a day job selling outside, I was outside sales, and I would just figure out how to sell my own service, my own coaching. I mean, it took years and years to figure it out.
But in terms of self-education, which I'm assuming is what you did, so what type of things did you do to learn how to invest and trade? You must have done lots.
I became a commodity. Yeah, I started trading commodities.
Right, okay.
So there's about 80 different commodities you can trade, at least back then. I'm sure there's more now.
There's more now, yeah.
But, you know, say there's 20 super, super liquid commodities. And what I realized is when I started looking at the commodities and I started reading price charts.
Yeah.
And price charts changed my life. Because as a dyslexic, reading was nearly impossible.
Yeah.
I could read, but to read a page, if you read a page in a book, that may take you 2 minutes to read that page. It would take me 10 to 15 minutes to read that page.
Okay.
And when I got to the bottom, if you asked me what the page was about, I wouldn't be able to tell you anything about it. So I started reading price charts. I started to learn how to read price charts and look at price as a trend and a direction. Like, oh, look at this. What, that keeps going up. Wait, it keeps going up. Like, I thought it would fall. I thought it was going to get like dizzy and fall over and it was way too high. And I just started noticing things that were trending just stayed trending way, 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 way longer than I ever thought it could. And the things that I thought were cheap, the stuff that was flatlined and really low to zero, because when I first came in, I'm like, you buy close to zero because that's cheap.
Yeah.
But then I was like, oh, it's cheap for a reason. So to answer your question, I started learning how to read price charts. And I just started noticing that if you bought something that was already doing what you wanted it to do, and I was like, oh, if you want your portfolio to get bigger, you need to own something that's getting bigger.
Follow the trend, yeah.
Yeah, like the price. Like if the price isn't going up, I don't care what the other metrics are. And I never got into, I mean, I did study fundamental investing because that's what everyone studied, at least in the 80s and the 90s. And I just started noticing I would buy these stocks that brokerage houses would call C's or D's or F's, but they were just trending. They were just trending. And so in answering your question, I discovered price charts. I was like, oh my gosh, they look like treasure maps. Like someone would be like, you got to buy XYZ. And I go look at the price chart. I'm like, it's lost.
Yeah.
It's like a bus driving around town, lost and confused, and it doesn't know where to go. But it's got the best marketing. It's got the best marketing campaign. I was like, I don't want to be on that bus. And there'd be another bus heading north out of town with horrible marketing. But I wanted to go north, just sticking with the metaphor. Yeah. So I was like, why don't I just buy the things that are going north? Well, it's not that simple, and you just can't buy that. You just can't do that. Oh, are you a timer? You're a trader. Oh, you're so risky. Like I start getting all these words put on me. I was like, what do you mean timer? Oh, you're timing. What do you mean? Like timing what?
Type in the market, yeah.
And I'm like, aren't we all timers? Which we are. I mean, you're either going to hold it for 30 years or you're going to day trade every minute. Like it's a spectrum. And I was like, oh, if you're on the extreme of any spectrum, it's pretty unhealthy. Yeah. So I started learning about price charts and I started studying NLP, neuro-linguistic programming. NLP is super fancy for how the brain actually works, how the software in the brain actually creates its beliefs and its behaviors. And it happens through words and experience.
Strange, I just had an NLP practitioner on a previous call. So bit of a coincidence there.
So yeah, I started using NLP with my clients and they started getting the exact results they wanted very quickly without trauma or drama. I was like, oh, rewire the brain, offer them a simple solution, have them identify their feelings, portfolio goes up.
And up, but not always up in one direction. They obviously they do vary from that.
Of course. There's going to be sideways in this. Yes.
So you obviously this is the trading side. Tell me more about the investment side of things.
So, I mean, investing and trading are very different, and yet there's a lot of similarities, right? You buy symbols for both of them. You're putting money into both of them. The intention is slightly different. So with investing, and I'll just set aside financial planning for a moment, just with investing, it's very similar. I want everyone to buy things that are already doing what they want them to do.
Yeah.
And you have to start with, this is one of the first questions I train everyone to ask themselves is the stock market even going higher? Right? Because as you know, there's periods where the stock market doesn't go higher. So the first thing I just wanted to know is, well, is the stock market going higher? And you can, without getting into weeds, there's simple ways of using moving averages, simple, not complicated ways to have it really be a binary question, a yes or a no. Not not the valuation of the market or the unemployment numbers or the GDP numbers, but just the market itself. And so with investing, the first question I train people to ask is the market going up? I didn't train them to ask themselves what their risk tolerance is. I didn't say, hey, Tony, what's your risk tolerance? Because what I realized is when I asked someone that question, their risk tolerance is 0 when the market's crashing, and it's 100% when the market's going up. So it's like, this is a very contextual question, right? So if you ask someone that question on a Tuesday and they had their coffee and their marriage is good and the market's going up and they see their portfolio going up, they're going to have a high tolerance to risk. And just the opposite, if the marriage isn't going well and their job doesn't look that good that quarter, they didn't hit their numbers and the market's down 30%, guess what their risk tolerance is going to be? Close to 0.
It certainly changes depending on what's happening in your life. There's no doubt about that. Yeah.
And so it's your money and your life matters, but you're putting it in the market. So what I realized is, oh my gosh, we have to know what's going on in the market first, right? So, okay, you're 40, 50, 60, 70. Which direction is the bus going? Is the market going north or south, or is it confused? And I just realized, oh, there's only 3 things an investment can do. Up, down, I don't know. And so through looking at price charts and learning NLP, and I've been using it now for 18 or 19 years, helping people rewire. And your question was about investing.
Yeah.
I have them first start with, what are the questions you're asking yourself? Most people aren't asking themselves questions. They're using statements, or they're asking the wrong questions, right? So with investing, what questions are you asking? And to me, one of the most important questions is the market going up? Yes or no? Okay, that's nothing about you. Okay. And here in the US, the market mostly is the S&P 500.
Yeah.
And so it's like, okay, so first let's buy the market and reinvest dividends. Now, in the US, the historical return is 10% a year.
Yeah.
So again, we're setting standards here. It's one symbol, and it's like, this is where we start. And then if people want to be in things that are moving faster than the market, then I show them specifically and quickly, oh yeah, if you want to go buy XYZ, it has to be beating the market, because if it's not, what's the point? And the point they would say is, well, it's doing this or it's doing that. I'm like, that's a story. The only thing that grows your portfolio is price. So with investing, I start listening to the questions they're asking themselves, I'm like, what do you say to yourself? Again, most of them are statements. I can't lose. I'm old. My job's going away. I can't lose this money. Statement, statement, statement. I'm already down. I've got to make up for lost time. Okay, so you've now just shared 9 statements with me, right? So in answering your question, I want to understand what's going on with them, right? Because, and I've done this experiment for years where I can give the same symbol to 20 or 30 people, and they have 20 different performances on the same symbol, which to me is fascinating because we know it's not the symbol. So yeah, with investing, I start with the index. Is it a yes or is it a no? And then once we start there, we can ask the follow-up question.
If somebody comes to you and says, I want to learn to make money, either through trading or through investing, but they're not sure which is the right option for them, how do you take them through that process and put them on the right track, whether it's trading or it's investing?
So the first course I started in '98, it's had many names over the years.
Mm-hmm.
I used to call it Clean Your Financial House.
Okay.
No one wants to clean their financial house, by the way. No one wants to clean their house. They hire people to do that. But so if someone comes to me and literally if they're like, look, I will start where you think from your 23 years of experience has the highest probability of getting me where I want to be with the most safe acceleration. Right. I'd say you absolutely need to clean your financial house, which is the investing course.
Yeah.
So, because it's the foundation, it's literally foundational. And when I say that, oftentimes I'll have someone, almost always a man, say, well, I've been investing for 20 years. Like, okay, that information doesn't help me. If you want to show me your performance, and most don't know their performance, because that tells you everything about the person.
It does, yeah.
If in answering your question, if we're not willing to audit our behavior, then you can't move forward. And if someone doesn't understand how to invest, it's not going to get better with trading. Trading is more of a condensed, I know trading is very sexy and exciting, but it's kind of like if you're a bad driver at 35 miles an hour, you're not going to be
at 65.
You're going to be worse at 65 at night. Even if the roads are dry and it's clear, like things don't get better when they move faster, right? If you're a bad parent with 1 kid, you're not getting better with 2. It's like if you're on your 17th girlfriend or boyfriend, right? The 18th is not going to solve the problem. So it's a fair question. Like I wish everyone would start with investing. So
yeah, I would agree.
Yeah.
I think well, I would determine that investing is where you start, because that's where you learn the basics and you build on the basics. And obviously the more you do, the more experience you get, then the better understanding and the better you are going to get at this. Trading is a different animal, again, in my experience, which is tends to go at a faster pace in terms of the analogy that you give. So therefore, you need to have more knowledge than you do to start off in investing when you go into trading. So I think trading is a natural progression if you want to go into that, but after you've done the investing side of things.
And I understand why people want to trade.
But it's more sexy, isn't it? I mean, in terms, people see trading as a sexier option. So it's a faster, it's a more beautiful partner, should we say?
Well, there's a lot of hope involved, right? If you think about the hope, like I've got to make up for lost time. Okay, well, that's a statement, and that's a very dangerous statement.
Chasing losses is one of the worst things that we can do. You know, we both know that. So
the highest. When trading becomes gambling, it becomes dangerous. The highest suicide rate out of any addiction on the planet is actually gambling.
Yeah, absolutely.
It's higher than alcoholism or anything else. Yeah. Gambling has the highest suicide rate. And a lot of it is because money is hidden. if someone is 300 pounds overweight and smokes 4 packs a
You see
day,
it. You can see
you can't hide that.
No.
But if someone's super fit and good looking and is horrible with their money, it's kind of hidden.
Yeah.
But money is very identity level. So I get why people want to do trading, because they're like, I don't have time. I got to quickly get this done. And it's like, okay, we have to slow down to go fast. Like, let's first get smooth about this. Let's get the fundamentals in. You think you're wasting time, but actually we're making sure that your mistakes are much smaller. So yeah, and answering your question, absolutely. I would love it. I would love it if everyone did investing first. And out of that, they'd say, oh, you know what? I now get that. I'd love to take 10% of my money because I want to have fun with it. And I want to figure it out. With investing, everybody, I believe, needs to figure it out. It's a foundational thing.
Yeah.
But do they also, if they want to figure out investing, they're such a better student. And coachableness is one of the things I sort for when people come into my world, because I'm going to offer a lot of things that are not mainstream. So they have to be open to looking at something differently.
Yeah, the best client I have, or the best clients I have, are the ones that we're on a journey together, if you like, whereas they may start off with relatively low knowledge and experience, but over a period of time, they do become very knowledgeable and they're making decisions with you. And often they will make their own decisions because they have a far better understanding than what they did when they first started. So I think that when you have a client or a student in your case,
sure,
then you the best ones to have are the ones who want to learn, that you want to understand, because you know they're going to be your best students or your best clients, and you can have grown-up conversations with those. And when you go through difficult periods like we have done over the last 12 months, they understand a lot more than what they would have done if they hadn't gone through that process.
A lot of the scaredness that happens with a person is the lack of clarity, right? And the lack of control. So I have this free course called Clarity and Control, because what I've just noticed, what people want the most is I just want clarity of what's going on, right? I mean, imagine if you'd walk around and every once in a while someone would just slap you, but you didn't know why. Like, it would feel really scared. There'd be this lack of clarity, like what is going on, or a loss of control of your life. When people have control over their money and they have clarity of what's going on, and then the market falls 34, in the States, the S&P fell 34% in 30 calendar days. Other countries fell different variations.
There was similar levels, I think, certainly in the UK there was.
Yeah. Having clarity of what was going on, visually seeing it and going, okay, I know where I am. I've been taught about these things, never won this fast, but because they had a level of clarity, they had a level of control that they never had before. Like, okay, I got it. This is what I have to do. And it was very procedural.
Yeah, but also if people had the means in terms of cash available, then they could have done very well if they invested money is also that those lower points, because as we know with most events, they do come back. It's a matter of time. This one obviously has come back quicker than perhaps what we first anticipated. But if you have that knowledge and understanding, you can make those informed decisions.
Yeah, one of the things I have all my clients do is I want them to look at the 4 or 5 biggest crashes over the last 50 years. Like, I want them to visually look at the price chart. Here in this, we had one in 1974. As far as big ones, 74, 87, 2000, 2008, 2020. So there's 5 over the last, say, 50 years. And for them to go and look and go, okay, the one in 74 from top to bottom, 18 months. Oh, 18 months. Okay. 87, 3 months. 2000, 30 months. 2008, 18 months. Okay. The 4 biggest before the one in 2020, 2 18, 1 3 month, and 1 30 month. them seeing it with their eyes, they go, oh, these end. Like they can read it, we can write a book on it, but for them to look at the actual prices falling,
Well,
falling,
the
falling,
graphs
falling.
tell the picture, don't they? You know, in a very simple way, they can visually see these things happen, but when they do happen, they do recover. It is a question of how long it's going to take. Are you prepared to ride out that period, whether it's 3 months or 18 months? If the answer is yes, then that gives you much more comfort to know that in all probability, that investment is going to recover.
And I agree. And so no one's taught to think with their eyes. We're taught to think with words.
Yeah.
And right, we read about things, but then our brain takes words, and that our brain actually makes pictures. Right. So the most overvalued since 1929. That's going to scare the brain. The brain's going to look like, am I going to have to eat cat food for us? Like, it's scary to hear, but we hear these words, right? And I've worked with a lot of women over the age of 50, divorced. And one of their biggest fears is being on the street, being a bag lady. I've heard it from multiple, I mean, hundreds of women over 2 decades. Like, that is a fear of a divorced or a single woman over the age of 50, regardless of whether they have money or not.
Yeah.
Is this, it's like they're loading up eating cat food. Oh my God, higher valuations than 87 and 29 and 2000. B of A, Merrill Lynch just signaling new sell signal. It's like, I'm scared. And we're hit with that. And our brain hears those words, or we read those words, and it loads up, I'm going to be on the streets.
Over the years, I mean, first of all, how long do your courses last? So somebody comes on board with you, how long are your courses? So are they weeks, months, or?
Yes, so they're 8 weeks. And there's 3 parts to it. You have to get my IP, which is mostly done through videos.
Yeah.
There's homework. Because if you're not actually getting in the pool and practicing a swim stroke or something, it's kind of a waste of time.
Yeah, don't do it on the sofa because
So I mean, I'll say to my clients, like, this is my expectation. My expectation is you show up.
Yeah.
Even if you don't like me. I'll say to them, we're taught to like the person. I'm not looking to have you not like me, but I'm just letting you know you may not like what I have to say.
Yeah.
But my expectation is you show up. So what I learned is cutting out all the fat, getting them quickly to knowing if they're safe or not.
Okay.
So that means I train them to read a price chart, because that's the thing that can tell them. If it's going higher and they're feeling scared, they can go, oh, I'm scared, but the money isn't scared.
Yeah.
Oh, price isn't scared, I'm scared. And they make that distinction, like, oh, I'm scared, not the price.
Yeah, it's trying to take the emotion out of it, isn't it?
I'm having them identify who's scared.
Yeah.
Is price scared, or are you scared? And then I want to see their financial house, right? So I want to see what it actually looks like. But to answer your question, it's 8 weeks. It's actually one of the things we're taught, that there's a lot of effort involved, and that's actually not true. Money does not do effort, humans do. So one of the things I teach both investing and trading is, you know, within medicine, it's minimum dose, maximum reward.
Correct.
Right. So you don't take the whole bottle of Tylenol or ibuprofen. You take the minimum to get the maximum. With investing, people think maximum.
Yeah.
I can trade all the time, therefore if I should trade all the time. So I'm just showing them how you do effort, money doesn't.
It's very difficult sometimes to get people to sit on their hands and do nothing. Because as you say, certainly from a trading point of view, over trading can be disastrous.
And no one owns what no one knows what you're investing in. Like, we all think everyone, like, the market knows.
Yeah.
Unless you're, managing tens or hundreds of billions. But what I do is I bring them in a way very quickly so their brain shifts almost immediately, like, oh my gosh. So I guess the way I describe it is, imagine you've been going to the beach your whole life.
Mm-hmm.
You're smart, you're intelligent, you make a lot of money, but you've been going to the beach the whole life. And when you go to the beach, your back is always to the water.
Yeah.
It's always to the water, and your eyes are always closed looking away from the beach.
Yeah.
And next to you is someone whispering scariness to you, but you hear the waves behind you. And so you don't know which ones are going to hit your ankles, which ones are going to take you out,
yeah,
or anything. So very quickly in my training, what I do is I have them turn around on the beach, open their eyes and go, there are the waves. Oh, they sound scary. No, I know. Oh, that looks normal. I know. And now you do. Now they can see the beach. They can see the waves. They don't have to trust someone about the waves. They can see whether weather is or is not happening. And so I do it almost immediately in the training. They go, oh my gosh, I didn't realize my back I've been taught. It's not anyone's fault, by the way. I didn't realize I was taught to back up to the beach, close my eyes, and hire someone to tell me what they think it's going to do. And so almost immediately in the training, they go, oh my gosh, this is amazing. What else is there? What else is going on? Because it's important to get that breakthrough quickly, right? Because then it changes the behavior of the brain. Like, why? Oh, okay, yeah, that doesn't make sense. Oh, and it's no longer trust or like, or good or bad. It's like, oh my gosh, that's water. Those are waves. Oh, here's a big one coming in. Let me just back up. So yeah, the training's 8 weeks. It's designed with a shifting early in the beginning, not like doing a lot of homework and getting through. It's like, let's get to having you have that experience you've been looking for very quickly, because it's important for the brain to get, oh, okay, I'm safe.
And do you then take them through more advanced training after that 8 weeks?
Yeah. So everyone wants something different coming into the training, and everyone wants the same thing.
Yeah.
Right. Everyone wants to know they're going to be okay. Everyone wants to know they're going to have enough. Right. Everyone wants to know that their loved ones are going to be okay. So there's these commonalities that everyone wants.
Yeah.
And then once they get the baselines, then they go, this is exactly what I wanted. Thank you. Right. And so that's a whole group of people.
Yeah.
And there's others that are like, oh my gosh, what else is going on at the beach? Like, what else can I do with this X-ray vision? Like, I'm so interested and curious about it. So it kind of depends where people are. Some find it very fun and enjoyable and they want to do more. And others are like, I got exactly what I wanted. This is great. Thank you so much.
Without naming names, are you able to sort of share some notable successes with some of your students? Or what do you see as success from a student?
So, I mean, anyone who shows up to the beach and is able to turn around and see it and go, oh, I'm okay. Right. So, very common successes are people maybe firing their financial advisors. By the way, I'm a financial advisor. I'm a certified financial planner. I'm a registered investment advisor. I manage people's money for a living. I have a separate company that manages money, and I have a training company.
Yeah.
So I have both. By the way, in the US, that is incredibly unusual. Yeah. It's incredibly unusual, and
even more unusual in the UK.
And the regulating, my compliance lawyer is like, RC, just so you know, there aren't people like you. So the regulators don't understand, this training, they hear education, they hear it's free. I actually forgot your question. I know you asked me a question.
Successes, really. What do you see as?
Got it. So people come in and they're like, I never thought I could retire. I can retire now. I was up at night. I was losing sleep. I don't worry about the market anymore. I mean, this is super common. I'm not scared about the market anymore. Last year was a great example. They saw their accounts change in value, but they're like, yeah, I saw it. I learned how to, step out when things happen. So there's this control back over their life.
Yeah.
I'll often get an email from a wife. Most of the people that take these courses, unfortunately, are men.
Yeah.
I say unfortunately because women are better at investing.
I think they're better at money management, full stop.
They're much better money managers. They have less testosterone in their body. There's no ego plays or hero trades. They're so good. They have less head trash going on. There's less ego and chest pounding. But sadly, most women think it's a men's thing. So a common enough experience is a wife emailing me saying, I got my husband back. I got my husband back. Our money's doing better. Like it'll just be, oh, by the way, yeah, I've been watching our money. It's doing much better. We let go our money manager that saved us. And I have my husband back, because what she did not realize, and he'll say this to me too. He goes, I feel like I have my life back because I know now we'll be okay. But it's to hear it from the wife or the spouse. I almost never hear it from the husband if the wife comes in. Like, there's another rooster in the hen house. And it's like, okay. But in answering your question, people can hear and they can read case studies. Yeah. And still they come in, they go, oh my God, I had 50 symbols. 45 were dragging the sailboat down. And 5 were making it go faster. I didn't know that. I now understand how to get rid of the things that are hurting me. No trauma, no drama, no 5-alarm fire. Just, oh my gosh, I didn't know it. Right. And so that level of clarity is life-changing. Yeah. And these are men and women who are not 20 years old.
Yeah, and they're not uneducated either. A lot of these people are very intelligent.
They're just highly educated.
They haven't been switched on to that aspect in terms of investing or trading or just money, full stop.
They were taught to close their eyes and put their back to the water. Yeah. So yeah, when people show up and say, I want to figure it out, almost immediately, they're like, oh my God, I own 87 symbols. No wonder why I'm scared. Yeah. But they then know exactly how to start culling that and getting control back and knowing they're going to have enough. And that they didn't realize just the speaker in their ears, like, I don't know if it's going to work out. I mean, you got to work more, you got to make more money, because it was just this unknown. All of a sudden it's like, oh, there it is right there. Dark clouds are coming in. Okay. Look very dark and black. Don't know what's going to happen, but this is the high probable thing to do. And so because they're in control, they get their life back. That is a common response from a client of having their life back. And they'll even say to me, secondary or tertiary, oh, by the way, my account's up 40% this year, or my account's up 22%, or but it's not even the first thing they lead with. They go, I'm saving more money now. Yeah. Because I want to, or I make more money now because now I get how to keep it and grow it. Like, it's this secondary effect or this third order effect. We're like, no wonder why. So those are, they're quite common responses. And I think because it's a practice of understanding how the brain works. And people are actually taught to, 55% of our brain is for pattern recognition, visual pattern recognition, not audible or olfactory or guttural, but 55% of our brain is pattern recognition, visual pattern recognition. And when I show someone very quickly and simply to recognize a pattern that can make them stable and safe and certain and comfortable and sleep well, they're like, oh, I didn't know this. So
I think you've demonstrated perfectly why education is so important, and no more so than it is in investing your own money and learning to do that, and do that to a level that you take control, and you make your life a better, or you make yourself a better future by being able to do that. And as you've illustrated, once you do that, that person changes, the outlook changes. It can make such a difference to them.
yeah, they become a bigger difference maker,
Yeah,
to themselves and their family and their cause and their community.
yeah, absolutely. RC, we're coming towards the end. I have a favorite question I ask all of my guests, and that question I'm going to put to you as well. And the question is, what does wealth mean to you?
So I'll answer it two ways. I'll tell you what it doesn't mean. It doesn't mean a big house and a new Mercedes and a Rolex. So the first time I ever made a lot of money, I bought a Rolex.
And you took it into that shop where they had a spade?
I have it. It's a GMT2. It's beautiful. It's one of the, standard, sports Rolexes. It's been sitting in a box for about 20 years. So wealth is not a showcasing. To me, it's going skiing on Wednesday with my kids.
Yeah.
I pulled my kids out of school a lot before the pandemic.
Okay.
I'm blessed with two kids that school is not difficult.
Yeah.
So, and even being divorced, my ex-wife's fine with it. Wealth is saying to my two kids, hey, you want to go skiing on Wednesday? Like Wednesday's not a Wednesday. Do you know what I'm saying? Like doesn't have to be a work day. Is knowing, like, wealth is, I don't have a dining room table. I have a pool table. I don't necessarily like pool, but I want to invite more fun into my life.
Yeah.
And what I noticed is I owned this dining room table and I used it once a year for something called Thanksgiving. And the other 364 days a year, it was just something that I placed stuff on.
Yeah. I hope
I do have a top. I mean, it's also a ping pong table. My kids love ping pong more than pool. Yeah. But I guess what I'm saying is it's choice, it's freedom, it's the ability to question, like, by the way, I don't live in a bachelor pad. Like, my kids are here a lot. Like, I'm a dad first. Like, we started this conversation off like, who is RC? RC's a single dad.
Yeah.
I love my kids. I love being a dad. It's ridiculously difficult. All my failures, are around dadhood. But wealth is being able to buy replace your dining room table and put a pool table there. It's like choice. Wealth is choice. To do things to avoid things you don't want to do, and to be able to invite more fun into your life.
That's a perfect answer as far as I'm concerned. I think choice, freedom, balance, all those aspects are far more important for most people than that monetary value or the luxuries that goes with it. It's being able to live the life that you want, in essence, and have the choice to be able to do that.
Well, and I'll just say this, and I know we're wrapping up. So in my early 20s, I made a lot of money.
Yeah. And
I remember going, okay, now what? Like, it was very fortunate that, and it wasn't a lot, right? It was a lot for a 20-something.
Yeah.
In the 90s. Like, it was more than any other 20-something I knew had. And I had 500,000 flight miles. I'd been flying all over the world, living in Asia, living this life, just this luxurious life. And I was like, still not happy. Have all the money I need as a 25-year-old. I don't want to not have money, but it was just nice to be able to buy a Rolex watch in your 20s and go, well, that didn't work. so I probably don't need the Porsche. If I want to buy a Porsche, that's fine. But if I'm not already enjoying, I don't mean to be like a Hallmark commercial, because I'm not. I'm a recovering cynic and a skeptic, but like it's just really going, okay, got it. Good relationships, good loving relationships. So anyway, I appreciate the conversation.
I think there's a strong argument is having enough to have or enjoy the life that you want. And that doesn't mean millions and millions and millions. It means having enough, whatever that means to you as an individual.
I'll end with this quote. I'll get it close, but not exact. There's a book called Catch-22. Joseph Heller wrote it. And he was at a party, I don't know, in the 60s. And I forgot the other writer who he was talking with. And they're at a money manager's house. And the one writer says to Joseph Heller, he goes, "Don't you feel bad that he makes more in a day than you make in a year?" And Heller said to his friend, he goes, "I'll have something he'll never have, enough." And I love that. And
yeah.
To know when you have enough, I mean, that's special.
Yeah, I love that too. RC, thank you so much for coming on the show. Thank you for sharing your story. And I'd like to wish you well in everything that you do.
Thanks so much. I appreciate your time and your energy. And it was great. Thanks so much.
All right. Thank you.
All right. Bye.